Welcome to After Hours at Traders Post for February 7th, 2025. I'm one of your hosts, Tom Hartman, joined as ever by Mike, the VWAP Whisperer Christensen. After Hours is a market commentary show brought to you by Traders Post, the best automated trading platform in the universe. But I'll tell you about that later. For now, we'll be hitting the biggest stories of the week. Palantir, the secret AI play, Google cratering on almost no bad news at all, and President Trump, who wants a strong dollar, no a weak dollar, no a strong dollar. The bell has rung. So let's dive in because as traders, we don't just watch the news, we trade it. How's it going, Mike?
Doing well. It's been an interesting week. More of this like choppy back and forth with markets not quite sure how to respond to Trump's executive orders. But for those of you that are trading on more of the short-term timeframes, it has been a roller coaster, and I hope you've been on the swings of that because I know I have.
So luckily with my VWAP strategy, it works the best in choppy markets.
Yeah.
Because you get to know exactly where the price should go and in what time period. In fact, later on before the end of this, I should actually just pull up that if we offset that liquidity indicator that we made, if you offset that by 78 days, I think almost exactly, I can essentially just place trades on the chart matching the liquidity jumps, and I get the bounces that I need. And I'm just like, this is unbelievable.
Yep.
Today's drop in Bitcoin was another one of these moves. And so it's just been printing money. And I say that as my account, I'm sure it's going to blow out.
But to your point, I think I posted this in our general channel today at our company. Even NASDAQ futures bounced right from the most recent anchored VWAP before sort of retracing before the end of the day. So VWAP in general is definitely an indicator that I've grown to love over the years, and it just gets more and more interesting to see how traders move around it.
That's right. So first up, Palantir's explosive 200% rally. Is it just AI hype, or has Palantir cemented itself as an unstoppable force? With deep government contracts, unlimited capital, allegedly, and a long-awaited profitability milestone, we're diving into what's next. Have you been following Palantir at all, Mike, when it comes to the AI game?
I have. And as you know, like in general, I'm more of a value buy investor. I'm interested in companies that are priced below their intrinsic value. So it's hard for me to follow companies like Palantir because they are growth companies. And just from a PE perspective, Palantir is at like 500 times price to earnings. It's extremely overvalued from a lot of perspectives. But if we're just looking at the fundamental growth of their earnings and their projected earnings into the future, there's a lot of positive things to be said about the company. As I made my way through kind of the fundamentals on this one, I was extremely impressed with the turnaround just in the last couple of years. They paid off an enormous debt to equity ratio. They're essentially debt free now. Earnings have been growing crazy. Free cash flow has been growing as well. And these contracts that they've been establishing for a long time now are just growing larger and larger in scope. And they appear to be one of the de facto leaders in using AI for military defense implementations. And I think that that's a really good position for us to be in, of course, as a country, is to have one of the best tech companies in the world in regards to defense technology right here in America. So obviously there's a lot of good things to be said about Palantir, but they are a fast moving growth stock. It's one that's a little more difficult for me to buy into. However, I see the scale of what they can accomplish in the future. I'd be looking to buy pullbacks on this one, I think.
So let's take a look at, but before I give my opinion or to ask you a couple of questions, let's just get our viewers up to speed on a little bit of like what the CEO is like and what the story is a little bit behind Palantir, because it is pretty interesting. I should mention just right at the get-go here that Palantir, the word comes from Lord of the Rings, and it's one of these devices, one of the 7 Palantiri. And what's funny about it is that it's like in the Lord of the Rings that we know, it's bad, like it's used for the downfall and destruction for a great number of people. So it was made for a good reason and then ended up a bad thing slowly over time. So I find it very interesting that they named their company after that. But that's neither here nor there. Let's see what the CEO, Alex Karp, has to say about himself.
Major tool for Musk and Ramaswamy's government efficiency agency could be artificial intelligence, and Palantir is already in the game. Anthropic and Palantir announced last month that they're partnering with Amazon Web Services to make Anthropic's Claude models available to U.S. intelligence and defense agencies. The agencies aim to use the large language model to process vast amounts of complex data rapidly and streamline clerical tasks for the government agencies. And when you say streamline, doesn't that mean saving money? That's not the only positive news for Palantir in the past couple of months. The big data tech company joined the S&P 500 on September 23rd and has been on a roaring rally since then, gaining 93%. Joining me now on a Fox Business exclusive is the man leading it all, Palantir CEO Alex Karp. I got to ask you about the stock. It has been such a wild ride. You joined the S&P in September, but even before that, people who understood the business jumped in and said, we believe in it. I mean, that's got to feel really, really good. Almost, I guess, a little bit like the world has woken up to something you already knew. And quite frankly, we already knew because you've been coming for about 3 years.
Well, you seem to know it early. One of the few people who invited me on when I was a pariah, which was about 18 years of our 20-year existence. Yeah, look, you know, things are good at Palantir. We said that, you know, the world is moving to software first, which no one believed. We said the way to build products is the way we did it, which no one believed. We said that you had to go back to what's now called kind of first principles, what an enterprise should do, not what an enterprise thinks it should do. We believed in meritocracy and hiring the best people. We believe America's a great country and our enemies should suffer. And we built products around those ideas. And, you know, there are a lot of people who didn't believe, some who did, and those that did were well rewarded. And we're kind of nose to the grindstone now. We're, you know, very.
Okay, so that's how he talks. That he doesn't actually end the sentences. So we'll just stop it there. So what I find interesting about the company is that you were just saying that before they had this large amount of debt. I was looking it up. It was something like they were like negative profit for until like 2 years ago.
Right.
They were
2021 is when they seem to work their way out of a almost 300% debt to equity ratio, which is incredibly high.
Okay, so I wanted to so they have so many. I mean, they're like a B2B thing, like and B2 government, so B2G. So they have these contracts, these $100 million, multi-$100 million contracts to do these black box type things with the government and these
Targeting of
corporations.
all kinds is what he said. You know, are you targeting for missiles? He said targeting of all kinds, whatever that means. But they're using AI as part of that as well, which is quite fascinating.
And the CEO, he seems to have this very bombastic, very America first rhetoric, which is showing up, which he seems to like to go and peddle around, which I find to be very interesting because a bet like that, it's sort of like you've heard me say stuff like, you know, if there's gonna be an event and you can't stop the event, or there's no reason to stop the event, or whatever's going to happen, you might as well bet on it in order to make money off of it, because why not? It's sort of like, to me, it's sort of like insurance. You don't want bad things to happen to you, but you certainly don't want, when the thing happens, not to have any skin in the game, not to come on top. And so to me, it's like I never really felt comfortable invested in any defense contractors or companies that I find to be where most of what they're doing is dubious. But Palantir, even though they do some dubious things, they're showing pretty interesting use cases for the LMs. I just want to show you this quick video from Twitter. I don't know if you've seen it, where it's this hospital that had their entire process learned by an LM within like a Palantir product, and then they basically cloned that hospital.
Right.
Have you seen this?
I haven't. And before you get to that, I do want to point out that that's what's probably the bigger part of what to take away from the Palantir story here, is that they're leveraging all of this experience they've had from these governmental contracts, which, you know, they work for every 3-letter agency in the United States and have built solutions for each and every one of them. But there's all this opportunity for efficiency and all this opportunity for advancement from a technological perspective that touches all kinds of other industries. So if they're moving into healthcare, I think that's important. If they're moving into governmental efficiency, I think that's important. But I'm also seeing that they seem to be moving into other foreign agencies as well. They work for the National Health Service in the United Kingdom. They're looking at European defense as well. And they're already working with like Airbus, BP, Merck, Credit Suisse, and others that should sort of clarify that this story goes well beyond these defense contracts. And I think that's the real opportunity here, is taking this technology to the next place. But maybe we can unpack more of why this is important for AI in general after the video here.
So this is I guess, an ad or something about this hospital that's using a Palantir technology.
Okay.
With Palantir, we created a digital twin of our most complex hospital. The goal was to simplify every variable in moving patients through the hospital and make it seamless. This tool, which is now being used by other healthcare systems, is the first commercially viable AI product co-developed by Cleveland Clinic. Take a look.
Running a hospital is complex. Physicians, nurses, hospitals, outpatient centers, operating rooms. More than 30,000 patient encounters every day. We are trying to orchestrate all of these moving parts, and they all need to go perfectly. Historically, it's done through spreadsheets, Post-its, phone calls, text messages. With Palantir, we were able to pull all of the data into a single place, a virtual command center that will model the entirety of hospital operations. We have 3 modules today.
Hospital 360 has transformed how we're able to place patients in beds. We're able to do it in a quicker, more efficient way. I can see the predicted number of patients coming in for the day by building, and I can see the number of predicted discharges coming out, and I can see the number of patients who are waiting, either in the emergency department or patients having surgery who need beds. It's live in real time. It's learning our data. It's reading the patient's notes and saying that's a potential discharge.
The nurse staffing matrix, you can actually see where you're overstaffed, where you're understaffed. Everybody had a trusted view of the patient census and the nurse allocation. It results in managing nurse assignments efficiently and effectively, and in a way that's more predictable and leads to nurse manager satisfaction. OR utilization, the objective function is how do we maximize the number of patients and procedures that we can do through each one of our operating rooms. We're trying to make a smart system, trying to model the problem properly. That's work in progress.
This is another way we're innovating around patient care. It's all about helping more people.
It's been transformative, and it just shows you the potential. One could imagine managing from ICUs to step-down units to floors to set the standard for being the best-run hospital in the world. That's the ambition.
All right, so I love this.
Mm-hmm.
I absolutely love this. The idea that, and this is the promise of the AI they've been telling us: feed us your information from your post-it notes, your emails, the conversation, feed it in, and the LM will be, not just the LM, but the whole AI-based system will be able to then figure out in granular detail where you need to be, what needs to happen to benefit the most number of people. I want this. Like, you can imagine a system like that down the line that's monitoring everything that you are doing in your own life. And can you imagine competing against somebody else who has that sort of system?
Sure.
Where it's optimizing everything that they're doing, when they're sleeping, when they're eating, how they're talking to other people, all that stuff. Oh my God, to me, that's absolutely brilliant. So when I then look at the stock and then I see it parabolic, I go, okay, I mean, yeah, of course. Why wouldn't this be the case? I would expect Google to be up like this. That's not happening.
Sure.
What I'm just curious about, because when we talked about last week about the AI plays, we talked about Meta and Amazon in the context of inference chips versus training chips,
Mm-hmm.
and how they would be resistant to this whole DeepSeek thing or competition in the AI space from abroad. And Alex Karp from Palantir is saying, "Hey, we already thought about that. We've been thinking about this for 20 years. We're not in the training game. We know that's going to be taken care of. We're in the software play, and this is where
Correct.
the trillions of dollars are going to be made."
That's right. And I think a lot of people have forecasted that for some time now. There have been conversations as early as maybe 6 months after OpenAI even released ChatGPT that pointed to this idea that governing data that no one else has access to is largely one of the competitive advantages that companies are going to have in terms of improving models that they're deploying to their customers. And I think that there's no question that Palantir is an example of having a warehouse of data that no one else really has access to, right? Like OpenAI was trained on the whole of the web, whatever was published publicly, not what is retained in data warehouses by massive corporations around the world. So access to that information gives Palantir an incredible, competitive moat here in terms of what they can do with that information relative to their competitors. And until you establish those types of contracts to access that information and actually model from it, it gives other AI companies that are in the software space a disadvantage in terms of the solutions they can provide. So yeah, I think Palantir is an example of one that has this specialization and access to information that gives them a competitive advantage. This is the software play that I think has been described for some time now.
So that's why these software companies. So this is Palantir.
Yep.
So that video we watched when they were up 93%, that was 2 months ago. They're up another 100%
Right.
since then.
That's right.
I mean, they're just gapping up. So now we're really in this parabolic GameStop level move on the chart, where you're even parabolic on a logarithmic chart. So then you're really exponential on that one.
Sure.
And then when I take a look at Nvidia, that's still struggling to get out of its dip because of DeepSeek. And then we take a look at the other plays, the Meta, which is also rising pretty dramatically, and then Amazon also rising dramatically based on this cloud play. This software thing, right? The software is eating the world thing. It's something not to be ignored at all. Now, there is one part that makes me like Palantir more than any of these other software plays, and that is if we're getting into a period of, let's say, the next 4 years with Trump is massive reduction in wasteful spending and removal of regulations and tax cuts and blah blah blah, and focused on GDP growth.
Mm-hmm.
Well, we might not have the 0% interest rate access to free quote unquote money in the capital markets, but there is another source of free money, which is government money, right? The fiscal side. And if these companies like Palantir who have access to these government contracts, it's not going to end. They're just going to continue. You can expect that to run for years and years, and then it becomes a great addition to their portfolio in order to get other things from other places. So it makes sense to me that they like other contracts from other places. So it makes sense to me that they could run at a loss for years, because the promise of what this data can be turned into is going to be hundreds to billions to trillions of potential dollars of actual productivity. I mean, this to me is like, okay, this is a company where you're looking at Palantir at whatever it is right now. What's the current stock? It's at 110,
Right.
and even though they have a high price PE ratio, it might be cheap.
That's the argument from a growth perspective in general. It's being able to forecast out what you think they're going to be able to produce that goes well beyond current valuations. And that's always been what's tough for me. But I feel like Palantir is an interesting exception to my rule for companies that I typically look at. Yes, you're right. It could feel very expensive today, but you're not comparing this to the maybe $1 trillion of market cap that they could be adding over the next 5 years, depending on how many markets they impact. And that's the tough part. It's very difficult to tell like what they're going to be able to accomplish. That said, Palantir's always been a very fascinating company, starting out in its original days, feeling like it was so black box that they couldn't even mention who their clients were. Nobody really, knew what they built. They couldn't talk about what products they were actually delivering to their customers. So it's really fascinating to see now how much more information we've really learned about them and the applications that are really rolling out to more of the private sector rather than just the defense contracts.
Right. All right. So the trade there would be, I don't know, long Palantir on pullbacks.
That would be my argument. I'd be looking for some pullbacks. Anytime you can get it a little bit cheaper than where it's priced right now, like parabolic moves are really tough to trade. But every day, if you're waiting for pullbacks, you're going to potentially watch it keep skyrocketing in the meantime. So perhaps split your bet,
That's right.
But it's a long one. You could even dollar cost average over the next 12 months or so, taking advantage of every up and down move and still get yourself into a good average position. That said, continue to investigate the company. There's a lot to learn about what they're trying to move into. I think Alex has a lot more of the story to tell now that they've kind of moved into new sectors, and it's definitely one to continue to understand the core business model, because as they move, if the bigger value proposition comes from what they can do in the private sector, then it's going to be really important to try to keep an eye on how the business shifts that direction.
That's right. And any company like that is also supporting the government and their government duties and the things they want to do while using the data of the population, it seems like a no-brainer. Like that's a money printing endeavor right there.
Sure.
All right. So next, Google just cratered nearly 10% in a week, a rare pullback for one of the tech's biggest players. Is this an overreaction or a golden setup for a rebound? With volatility heating up, we're looking at the best way to trade Google. So let's just take a quick look at, I went through a bunch of analysts' opinion about it, and I thought this one was particularly succinct, a good summary, and a good perspective on it. So let's just pull it up.
He's a portfolio manager at Gabelli Funds. Microsoft, Meta, Alphabet, Apple are all top 10 holdings in his growth fund. It's great to have you here. And when other people talk about whether we're going to rotate out of big tech, it's like existential for you because this is your whole portfolio. So just on Alphabet specifically, what do you make of the market's reaction?
Well, I actually think the market's reaction today is it's not that exciting. It comes down to margins, I think. Alphabet's a stock that tends to trade pretty sensitively to how they do on margins and profitability. It's a company that doesn't provide a lot of investor outreach, and I think changes in margins can really swing the stock, and they kind of missed on margins last night. They also provided an initial 2025 CapEx outlook, which was quite a bit ahead of where the street is. So I think this combination of softer margins and higher investment, the market's not liking that today.
It makes it clear that this is a company in transition, right? I mean, the reason why people loved the profit margins was because they just printed money from the internet business where you search for something, you get 10 links, tons of ads, and that was a high margin business. How high were margins at the peak?
Well, back to your comment on company in transition, I think that's the other key. Sorry to divert the conversation here, but I think this is AI is really driving a big transition for this company, and specifically at their core search business. I think there's been a question of how does search fare in a world of generative AI?
Absolutely.
What does search look like many years from now? Because for a long time, investors viewed search as sort of a utility on the internet, something that was always going to be around. A lot of people were always going to use it. AI comes along, people find themselves using chatbots more and more. Search becomes a little bit less important. So we're at this kind of inflection point for Google search. Now, what they're doing with AI in search is this thing called AI search overviews.
Right, which I love using, but I noticed there's no ads there.
Well, that's actually not totally true. They are starting to monetize that. And one of the key things they said last night on the earnings call was they're monetizing AI search overviews at parity with core search, which I think was really important data point. Like you, I like using AI search overviews as well. I mean, I noticed the other day, I Google searched how bad are the New York Giants, and Google search.
I don't know why you had to Google that. We all kind of know. But.
Well, actually, AI overviews gave a nice kind of context. It said, this year they were bad, but they might not be bad in the future. So I think it's actually.
So now it's predicting for you what it thinks might happen.
It's a helpful tool. It gives more context. And what Google's saying last night is AI overviews are driving more queries. So if it's driving more queries, more engagement, and monetization is at par with the core, I think that's a decent recipe going forward, particularly for a stock trading at a valuation that suggests that the market thinks this is a loser in AI.
All of which is to say, it sounds like you're unflummoxed by the dip and would even be a buyer here. But I would also wonder if the company, like you said, they haven't had to say a lot to investors in the past. It's a pretty straightforward business. It was a great one of the greatest that's ever existed. Do they need to talk more now about this transition and maybe talk about those margins, whatever might happen in the near term, talk about the investment, again, with an eye towards, okay, maybe 5 or 8 years from now, we can come out in as solid position as we were once in, because in our house, we're using a ton of other products. I still Google things, but I use a lot of other products as well. I do also use Gemini, and we do pay for that, but I don't know for how long that might be the case.
Yeah, so I think the key there is there's a new CFO. She joined this summer.
All right, that's not as interesting. Let's just stop it there. So there's two things I really like from this this interview, and it sent me down the rabbit hole. One, I'm always looking for, when is Google going to have its Yahoo moment, right? I don't know if you're like me or if you know anyone like me, but I like to be obsessed with how did Yahoo go from like a staple to just gone as a directory. So I'm almost wondering, is Google going to be jumping the shark? I did not realize that their search volume is up. Right, he even says here their queries are up.
It's creating additional queries. Once you've gotten past the overview, you end up adding to your queries. That totally makes sense. Yeah,
and that they're ad placing within the AI queries, within the overview, which I find to be fascinating. And so, just like we were talking about on the heels of the Palantir story, if there's one thing Google has, is 2 decades worth of data.
Sure.
And we know that
and a distribution network.
Correct. Right. And we don't know. We have no real ability to put a number of what that data is worth, because as they come up with new combinations of ways, and as other people find use cases for it, right? OpenAI opened up a new avenue for business for Google by proving that this avenue was worthwhile. But then Google could jump in the game and participate. And so, one, we don't know what the value is there. And two, they're not fading away. They are innovating on these different things. They do want to change. So she mentions here this idea. Hey, what if they're evolving now, but it'll take 5-10 years before we actually see the returns on that, and now it's not worth investing in there. And I'm not really seeing where it'll take 10 years for any of this stuff to happen. These things are happening pretty quickly.
Way faster. Yeah.
Way faster.
Right.
And so when I see a dip like this for Google, I go, okay, this is something that you actually, I just want to pull it up over here real quick. I'm going to show you the chart of Meta. Do you remember when Meta dropped? What was this? Like 76%? This is not the COVID drop, folks. This drop in Meta is not the COVID drop. This is the COVID drop.
Right.
All right. And it V'd up, and then it dropped. What is it? Yeah, I think it was 76% in value. And I was like, oh my God. Is that the end for Facebook? Well, we're in a different world. This is not the world of Yahoo anymore. Now we have software, and the pivots that can be made can be so dramatic that you can have Facebook going from the lows up to here of 700%. Right? And so the switch that can happen with Google, to me, is the turn that they can make in their innovation. To me, you should bet on that happening. And if that's the case, well, the trade for old Tommy Boy is calls on Google options. Sure. We saw this from Kem talking about it last week, that if you express your bet in call options, you get asymmetry to the upside. You get to participate in the up move without being as exposed to the downside, and you only have to risk a certain amount of capital. This is the thing I find so fascinating about this Google trade. One thing I do want to add to that. So I actually want to play. I want to play just a little short clip from Carson on an interview with Adam Taggart, Thoughtful Money. And he says in a very articulate way something that I've been waiting for someone like him to say, which is the pitch for that options are the best way to trade the market, not the underlying. If you have, anyways, let's see what he has to say here.
No investor at this point should be betting on up or down. If you're betting on up or down, you're living in a cave somewhere in the dark ages. The reality is, when you make a decision about anything, you have some information that is nuanced. It is very specific to a bet that is not just up or down. Do you want to be long a stock? Well, maybe you like parts of a stock, or you think that it has a high probability of really a big potential payout if they get some drug approved, or come up with some innovation. But that doesn't mean you like everything about that stock. There's probably risks to that stock that you don't like, or outcomes that over time and distance that are not good bets. Every asset is a complex three-dimensional thing, and whether it's a stock or a bond or commodity, and every piece of information is nuanced. So we should be betting on the information we have, the edge we believe we have. And if you want to get the best risk-adjusted reward in any scenario, you should be trying to align the bet that you have based on the view that you have in the most specific possible way. And you can do that. It's easy to do that now. Why would you just be long or short of the asset in response to the information that you have? So I think that's the way people need to reframe and think about bets. Probabilistic outcomes. You and I, when I make a decision, we don't just say yes or no. We think about there's this piece and there's this piece, and we're probabilistically trying to come up to the best. We think not everybody may do the math in their head, right? But they're thinking about the nuances. So there needs to be a more that kind of thought process. So when I'm saying be long, volatility, you need to go look at the distribution of outcomes and see what part of that distribution is way too cheap, and own those parts. And maybe that might be long, one part betting on an up move, and maybe one part betting on a down move. And they're both very specific bets at the same time, but you may not be long or short. You may be betting on certain paths of outcomes which are way more likely, right, relative to the pricing, while ruling out all the other parts that you think are relatively fairly valued, or maybe selling one that's expensive that's on the downside and buying one that's cheap on the downside. So I think we need to be much more nuanced in how we bet. And by the way, people are like, why in 2021 people are like, this options boom is, it's a short-term, people are betting money and they're betting like crazy and this will fade. And I was there in 21 telling people, no, this is much like work from home. This is not going away. This is the acceleration of a trend that's been there since the beginning of options that will continue to take hold. They're superior technology, a superior way to bet on outcomes. They're more specific. And at the end of the day, guess what? There's a reason the options market is eating underlying markets, because underlying markets are just an expected value of a much richer distribution of outcomes. They are simply, when we talk about the tail wagging the dog, they are the tail. They move based on how the different parts of the distribution and the market move. They're simply an average of every single infinite outcomes that can happen in the market. And if you peel away the options train, you'll see what those paths and outcomes actually are. And so that's what we should be. That's how we should be positioning.
So I agree. I think in general, options always represent a different way to express your view on a company. And maybe one interesting takeaway from what he's challenging us to think about is an often overlooked and not really well talked about or appreciated aspect of what Google's working on, which is their Vertex AI offering, which is their enterprise AI solution. I got a chance to actually demo this as part of Google's onboarding for another system I'm working on, and the Vertex tool is more of an AI pipeline that's directed at larger enterprise customers that can pull in their own internal data, ensure that it's secure, and actually produce much more interesting model results from that. Sort of pointing back to what we were saying about Palantir and how they have access to all this interesting information that gives them a competitive edge. Companies that are leveraging their own data using tools like Vertex can leverage AI in a way to their advantage, which gives them much more efficiency, right? And as far as I can tell, I don't know that OpenAI has a similar enterprise level offering. And there's obviously far more retail involvement or regular, general consumer involvement or use of OpenAI than compared to something like Vertex. So an interesting way to express this trade is to say, well, there's kind of an enterprise competition model here, right? More of a B2B model that needs to be considered. And I think Google might have an opportunity to gain stakehold there that other companies aren't necessarily paying attention to, or at least we're not hearing much about it. What are your thoughts on that?
Well, that's one of those other avenues that, like the innovation that Google's making into AI. People are acting like the $75 billion that they earmarked for it in their last earnings call. Oh, it'll take 5-10 years for that to pay off. They've already been doing this, right? I don't know if you saw this interview with I think the guy who's the head of AI at Google at a TED conference. They asked him, so why did OpenAI beat you guys to AI to market?
Sure.
And he says, we've had this for years, but we thought that the hallucinations were a deal breaker for people. We had no idea. The people were like, no, that's fine. let it hallucinate. I'll still give it all my information, do whatever I need to. But they've been developing these things and these tools, and they've been thinking about how these things can merge together. Alex Karp in another interview states that the reason why he wasn't worried about DeepSeek is because it's not just the base LM models or any of these AI models that they're using. It's the infrastructure necessary in order to support this and turn it into something that's actually useful. That
That's right.
whole culture, the whole pipeline, and Google has that in spades.
Right.
And so to see their recent earnings as like, oh well, now they're just dipping their toe into AI to begin with. No, that's
They've been at it for a
ridiculous.
long time. I think they're also getting pretty aggressive lately with trying to incorporate Gemini across all of their products. Which, back to my earlier point, they have a large distribution network here, right? Their ability to put their product in front of as many eyeballs as possible gives them this advantage that they're now starting to take advantage of. So you're finding Gemini is showing up in your email, it's showing up in your Google Drive, it's showing up in your conversations. You can do AI summaries of emails now. Like they're slowly trying to introduce the product to you so that it feels more natural for you to want to use it. And it's a timing factor there. More and more people have to adopt it before they feel much more comfortable with it. But I just want to point back to the enterprise offering, the Vertex AI offering. I think it's pretty interesting because it starts to move more and more companies towards using models at scale in ways that they've never really thought about before. And I think that's a huge opportunity.
So like in the same vein as like Palantir's ontology, their sort of thing, like they're packaging AI in such a
More
way.
like a self-serve model though, right? Like they'll give you the ability to onboard and sort of establish the connections to all of your resources necessary. They get you set up with BigQuery, you start importing data, and now you can build models on top of that. I think we're almost at a point now where companies can start leveraging the power of machine learning and AI without needing a huge data science team or a third-party consultant in order to do these integrations for them. And that sort of democratizes the power that AI can really present companies in terms of efficiency and predicting outcomes. You know, we saw this earlier about what Palantir is trying to provide just a hospital alone. There's enormous opportunity for efficiencies across every industry and every business sector in the world. So this could be a huge play for Google in my mind.
That's right. All right, so I just want to end on this one last thing as a pitch for if someone wants to dip their toe into options. If we take a look at the Google chart right now, and we just measure the types of dips that they have, I'm expecting Google to get potentially down to the 175 area over here in order to get its bounce. And if it does bounce from around here back up to its highs over the next 2 weeks, months, or whatever, there's a possibility of placing just regular call options. You don't have to have anything too crazy for your for the options, and it would return anywhere between like 200% to 500% if we move back up to all-time highs, which is just 20% away from the bounce within about a month's time.
I
That's
love it.
a bet that I like.
Yeah, and not only do I like the bet, but I also like Google's positioning better than Palantir's. They're not significantly overvalued. In fact, I'd place them at a price target of roughly $280 a share, even from current prices, just based on discounted cash flows in the future. So intrinsic value looks good, growth looks good. They're sitting on plenty of cash. You know, there's plenty of opportunity for them to grow, especially and compete in the AI space. Analysts are projecting them growing well into the future at a pretty healthy clip. So yeah, the options play makes a ton of sense. Were you going to demonstrate how to price this one out if we wanted to buy roughly at the, what are we thinking here? The
Well, I was thinking right now
170 mark, 175 mark.
I don't have any tools that allow me to determine what the price of the option will be at that location.
Correct. Yeah.
So just assuming it right now, if you were to buy it today, I could just show that again. Basically,
Yeah. Let's assume we get somewhere to around a 250 to 280 price target.
Oh, well, I was thinking within, let's say, a month time. So just the bounce off the level.
Okay.
So if that were to happen, then you can get something like what is it, a $32 investment or $31 investment for one of these options contracts versus the 185 you'd be paying for the actual share.
Sure.
If you just bought the share 195 or let's say 175 and it went up 20%, fine, you made the 20%. But that same value instead of options contract, if it bounced within a month, would bring something around 542% return at the
Yep.
price of the option right now. And this option, when the price gets to 175, will be even cheaper. It might even be half this price, right?
Right.
Because this is a call option,
Allowing
so
you to load up a bit more.
load up even more. So you could start buying now or wait till it gets down there, and all of a sudden you're buying it at $16 to $20 per option, and you're making 700%, 800% on the move up. Not to mention a blast past there.
Not to mention the asymmetry of the trade relative to holding the underlying stock. So, the tough part about buying these shares directly is the drawdown you experience if prices continue to go down. With an options contract, you have that fixed premium cost, and if you let it just expire worthless, that's the only risk you're really putting on the table.
That's right. Which is, what is it? It's just so much less. And anyways, so that's what Ken was saying. The risk adjusted return.
Mm-hmm.
Fine, you had the theta decay, but you're putting, and it might expire worthless, but you're putting so much less down on the table. You could take that bet multiple times, and it might equal to what your stop loss would have been if you had put a much larger position on. So because people are not putting the long position on for the underlying asset and then writing that to, like, with the idea that it would go to, they would drop 50% of this, they would just take that, unless that's what you're doing. If you're just buying the asset, you're like, I'm going to hold it for the next 10 years and I don't care if it goes up and down, then we're not talking about that. We're talking about that you have a view that you want to express, that you're like, I think that this sell-off was overreaction. Fine, then take advantage of that overreaction and place your call option and reap the benefit on the backside. And if you're wrong, well, you're out a few bucks.
All agreed there.
All right. So before our final segment, just a quick shout out to Traders Post, the automated trading platform that allows you to connect your trading and investment strategies to your broker or crypto exchange with ease and flexibility. If you're tired of being the bottleneck in your trading, head over to traderspost.io and find out how automation can make your road to success that much easier. And finally, Trump is making moves on the dollar. You get a tariff, you get a tariff, you get a tariff. Trump's policies are hinting at, checking notes, deflation across the board, folks. Is this good? Is this bad? I don't know. All right, Mike, we've been talking about we talk about the dollar all the time.
All the time, every time.
Dollar going up, dollar going down. And I was making this pitch, hey, the last time that Trump came in the office, the dollar basically peaked and then it dropped like 15% over a year. And that's what I was sort of like hoping for. Liquidity gets injected to the markets. Stock market goes all-time highs. Bitcoin launches, all nice and good. I saw the Scott Bessent, the new Treasury Secretary, interview with Bloomberg. And he's been making the rounds at all the different news stations. And I'm not so sure anymore that that's what they're betting on. It looks like what they're hoping is, or what Trump wants is a strong dollar. He wants the dollar to be up because, well, I don't know why Trump wants the dollar to be up. All right, I'm trying to get his view. What does he actually think about the dollar? And let me just show you this from 2016, 2017. Let me show you two quick clips here because I just want you to see the disjointed nature of the Trump policies around the dollar.
January was a wild ride for those invested in the U.S. dollar. At one point, the currency hit a 14-month high. But by the end of the month, the U.S. dollar index had fallen 2.6% against a basket of currencies, suffering its worst January decline in 30 years. The reversal came after a statement from U.S. President Donald Trump saying the dollar had become too strong. A strong dollar makes U.S. exports more expensive, hurting U.S. manufacturers, a sector Trump has vowed to revive. His statement indicated a dramatic reversal in dollar policy.
The strong dollar policy has been the cornerstone of U.S. fiscal policy towards the dollar for the past 20 years, ever since Robert Rubin under President Clinton made it so. And that really was a sign that, you could come to the U.S., you can invest in U.S. denominated assets, and the U.S. government would not touch them. They would not intervene. So the fact that this may be off the table takes away what's been a 20-year assurance for the greenback.
All right, so that one quickly, and then I'll just pull up the second one. So that was back in 2017. Trump Trump wanted a strong dollar. The dollar got strong. Then it was like, okay, it's too strong right now because this is hurting what we needed for our manufacturing base. So I just want to show what. And then Steve Mnuchin came out some months later on, who was his Treasury Secretary at the time, and then he said something about the dollar, and then immediately Donald Trump backtracked on what that guy said. So let's just play it real quick here. This is 2017. This is 2018.
Administration is trying to downplay the Treasury Secretary's comments on Wednesday that a weak dollar is good for US trade. Well, that's certainly a truism. Everybody knows that. However, it is a departure from the conventional wisdom that America is best served by dollar strength. Here in Davos, Mnuchin tried to clarify, saying he's not concerned about day-to-day fluctuations.
In the short term, where the dollar is not a concern of mine, okay, that it will fluctuate. That in the short term, there's obviously benefits and issues with a lower dollar.
Well, yes, this was the effect of the Treasury Secretary's original comments and the clarification. The dollar fell, then fell further to a 3-year low and only rebounded after President Trump told CNBC the Secretary's original comments had been misinterpreted.
I think they were taken out of context because I read his exact statement. I'll tell you where I stand, which ultimately is very important. Number one, I don't like talking about it because, frankly, nobody should be talking about it. It should be what it is. It should also be based on the strength of the country. We are doing so well. Our country is becoming so economically strong again, and strong in other ways too, by the way, that the dollar is going to get stronger and stronger. And ultimately, I want to see a strong dollar.
Okay, so he wants a strong dollar, he wants a weak dollar, he wants a strong dollar. Trump doesn't necessarily understand that as a world reserve currency, you don't have the luxury of not paying attention to what's going on in the dollar. It literally messes up the entire world when you guys don't pay attention to the dollar. So that's one thing. So that was 2017 and 2018. I only have one more clip to play with you on this thing, which is Scott Bessent now, his Treasury Secretary now, talking about the US dollar. One quick second. Here it is.
And now, as in your new role, you oversee U.S. currency policy. I'd like to ask you, what does a strong dollar mean to you?
Well, first of all, the strong dollar policy is completely intact with President Trump. And I was very happy at his Economic Club of New York speech in August when he re-emphasized the importance of maintaining the dollar reserve currency status. But let's think about, what does a strong dollar mean? It really means four things. One, that when we think about a fiat currency, a piece of paper is credibility. So a strong dollar is credibility and a rule of law that is backing it up. Two, it means a composite price on the screen, the Bloomberg Currency Index, that is the dollar moving up against that. Three, it is a bilateral price. So what's important to remember is the dollar is either weak or strong versus something else. So we want the dollar to be strong. What we don't want is other countries to weaken their currencies to manipulate their trade. And then fourth, that we want to have the best policies that create the environment for a strong dollar.
All right, so all that bothers me to no end, because what I'm not ever hearing from these people is the truth, which is you can't have a strong dollar, the US dollar, the world reserve currency. You can't have a strong dollar and then not expect other countries to devalue their dollars in order to compete. They have to. That's the only way they're going to get the dollars. They have to print their own currency in order to compete that way. And so Trump has said that if other countries do that, that he's going to put on 100% tariff on those countries, further exacerbating the thing. So please, guys, translation, that's deflationary all around. There's not enough money going around. The dollar going up means there's not enough dollars go around. And he's like, hey, I'm going to stop whatever you're doing that will increase the amount of dollars going around. this to me is crazy. This is insane. So I don't know. Do you have any opinions on the strong dollar talk? One, do you believe it? And two, what do you think the effects might be?
I can tell you that I'd be long the dollar in short emerging markets at the moment.
Absolutely. Well, remember we were saying a couple of weeks ago, like I think the dollar goes to 120, 129, something like that. And I was like, I look at the chart and it's just that, and I never really know what will make it go there. But then inevitably something happens and it makes the charts move the way that it move. And then when I hear this talk of tariffs and protectionism, which is fine. Like I get that's good for America in order to do that, but the effect that it has on the dollar, it could make it skyrocket. China right now is in full-on recession. Full-on recession. The Canadian dollar is down almost 50% versus the American dollar. Like it is problematic all around. And ironically, the higher interest rates that are happening in the United States makes the U.S. Treasury and thus the dollar more attractive to outside investment. So it makes the America sort of like suck in more of the dollars and the productivity from abroad as you guys get your house in order. You guys become more attractive, which is the opposite of what you need to do in order to get the dollar to come down and spread out across the world. It's a weird quagmire you guys are in, where your politicians have to institute policies that are good enough to get you guys going, move along, but not so good as to make you guys so attractive that all the money leaves from everywhere else. But long dollar and short emerging markets is like that's gonna be a golden play.
For sure. And I think the thing to typically watch out for there would be around the potential for trade war escalations and obviously any new tariff announcements. I mean, all of those are going to have a direct impact on those exact trades. But to your point, it's a tough one because policy will obviously have an impact on a lot of this. And I don't have an opinion about where it should be. Maybe to Trump's point, like, he thinks no one should even be thinking about the strength of the dollar. I don't think that's correct. However, it is sort of last on my list of all the things that I'm trying to pay attention to. GDP, really? the overall earnings of the market. I'm trying to keep track of price action there. I do love that you introduced the dollar in every one of our episodes here, because I think it's an important factor to pay attention to. I just don't have a strong opinion about where it should lie or how much control we really have on that aside from governmental policy.
That's so interesting. Right. And it makes sense to me because for the American populace, there is no advantage to a politician coming and saying, hey, we're going to have to devalue our currency, print more dollars and send them abroad. You don't understand. That's the deal we have with other countries, is in order to help them. Like they'll be like, what are you talking about? No. I want my dollar strong. The idea of when you have American dollars and you have to buy something abroad, it's like, great. Why wouldn't I want that power, that strength?
And we've enjoyed such a low inflation environment for so long, with exception to the COVID era, obviously, that we've never really thought about our purchasing power, and relative to other countries. In many cases, it's always been an improvement. You've got this opportunity to take a dollar and spend a whole lot more in another country. Mexico's always been pretty positive. Except for a few instances I can think of, I was able to spend more in Canada with US dollars than the other way around. So the perspective I think we tend to have as American citizens is that, the dollar is still a dollar. It's I can still go buy a dollar worth of things. Yeah, exactly.
Excellent. Well, one good thing for me is that, or what I find interesting is that Canada, in its tariff war scuffle or whatever, I don't know, you can call it a war. We're sort of like 7-year-olds next to a 40-year-old, but the prime minister said, hey, you guys should buy more locally. You should buy more within Canada, and that way you sort of avoid these tariffs, which I sort of like. I like this idea that
I think that was the objective with increasing tariffs here, was to increase American manufacturing, which should encourage more buying from local companies as well.
Right. Well, whereas America has the whole Triffin's dilemma thing they have to deal with, the balancing of the currency, we never had an excuse in Canada for why we were so terrible at managing our resources and all that. Like, we were subsidized by the United States to the tune of hundreds of billions of dollars, and we sort of got used to that. You guys are our neighbors and all that. We get to trade with you guys. You guys pay us in the American dollars. We get almost almost get to have that sort of benefit that you guys have. And so we never took advantage of our resources. We never took advantage of local businesses. We never did anything to do that. We don't even build houses, for God's sakes. Now they're like, well, maybe we're gonna have to start doing all that. And I go, hey, that's pretty good. I'll take that. Where Canada turns inward and says, hey, we have all the resources. Let's use them for a little bit. So that's not so bad.
Yeah. Okay. Some good outcome. Maybe shorting the emerging markets is a good play, but don't short Canadian dollars.
We're essentially a third world country in the first world. Like that's essentially what we are. Our currency falls 50% versus the dollar over the last 20 years. That's emerging market territory.
So you're seeing more room for downside, despite the Canadian dollar looking like it's really kind of hit a support zone here at 68 cents relative to the US dollar.
There's a mentality shift here, and we don't really know what the world looks like where the empire turns inward. We don't know what opportunities. Like I was going over it, and it's like tariffs in some ways can be inflationary, and then in other ways can be deflationary. Because if we start doing that, actually our currency will stop falling as we stop chasing the dollar in that way. We stop denominating certain debts in dollars. We sort of ease that tension. It's sort of like your credit card. If you stop spending on the credit card and now you start paying a little bit, all of a sudden your monthly payment goes slightly lower. You go, wait a second. I'm spending less, like I have less money, but I'm actually saving more. It's this weird sort of balance that's happening. So I don't know what it looks like. Tariffs might ultimately end up being deflationary, and I'm all for deflation. I'm on team deflation 100%. I would rather massive deflation and a depression because of it than massive inflation, where the only solution is dissolve the currency, jubilee all the debt, and let's start all over again. That's a nightmare. Right. I'll take deflation.
Agreed there.
All right. So that's it for our stories for this week. It's been fun. It's fun as always to catch up. We're going to be back next Friday with more stories. Trump's still going to be president, so I'm sure we're going to have all kinds of new things to talk about as well.
New things every week.
Trades. Right. But until then, wish you guys a great weekend and happy trading.
Cheers, everyone.
Thank you.